Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers.
If you live in Southeast Asia, chances are you've booked the ride, gotten your food delivered, or even made a payment using Grab. Launched in 2012 as a ride-hailing service called MyTeksi, today Grab is a super app with over 180 million users in 8 countries across Southeast Asia. There's no denying the fact that Grab is big business with its tentacles in some of the most essential parts of our lives. But is it worth putting your money behind the company? Welcome back to Stock Investing from Zero on WangHiro, a series where we use a beginner's lens to look at public listed companies to help you decide if you should invest in them. So John, let's put on your beginner's lens and analyze Grab.
Most people see a brand, see something that's familiar with it, and straight away decide that because they're everywhere, they decide that this is a good stock or business to buy. Ironically, that's actually this afternoon I'm meeting a potential client, and the first thing he asks is, "Do you buy Alibaba? Do you buy all that kind of things?" And rather than trying to explain it, I try to ask questions because by asking questions, it actually gets the audience or the potential client to actually think through things rather than take things at face value. Okay, so the 4 questions again, I'm gonna shoot them all here so that everyone knows the anchor, and then we'll go through each question one by one. What does the business do and how do they make money? Are they profitable and can they be financially stable doing it? Who is the audience and how can they grow? And last but not least, are they cheap or expensive? Now, a lot of times people go straight to the last questions, are they cheap or expensive? Because they want to straight away decide buy or sell. But for me, you realize that always the questions about the business starts first. Only then we talk about valuations. So in your point of view, let's just say you have not seen the financials of Grab, Louis. From your user experience, how do you like it as a user?
As a user, I find it. I mean, Grab around Southeast Asia, it's the only ride-hailing service in Malaysia, I think.
Yeah. They used to be smaller. They used to be Uber as well as a competitor and smaller guys, but now they're dominant.
They're the dominant one. So I think in the ride-hailing space, you probably don't have a choice.
Yeah.
Depending where you stay, right? So that part, I guess, they monopolize, so I can't really say if it's good or bad. I don't have a comparison. But in terms of food delivery, I quite like them because their fees are relatively lower than Foodpanda. So they have like 3 different tiers now, I think. The standard, express, and then the slow.
Yeah.
So you can pay, at least you can choose, right? Okay, if I want it, if I'm okay waiting, then I pay a bit less. But also sometimes you can't choose. You can't choose if you want it slow, then cheaper. No, it's just one fixed fee. So on that part, I feel like, okay, at least Grab is making some improvements to improve the user experience, basically. So I really like that about that, and that also says a lot to me that the people behind Grab are actually thinking about all these things. Yeah. I also like to use Grab for paying things. So quite widely accepted, where I say I think across Malaysia, like Grab, most e-wallets, they are integrated into terminals like EGHL. So quite widely accepted, and I think they also partner with Stripe.
Yeah.
Right? So on a lot of websites, it's quite widely used. So on that front, I also quite liked it. And they also have the pay later.
Yes.
Yeah, under one platform, there's a lot of financial offerings as well. So I find it very convenient. And I think I use Grab for food delivery and payments at least once a week, at least.
At least, right?
At least. So for me, just at face value, I think, wow, this is quite a big business. Yeah, that's what I would think. And well, I mean, maybe if they have business in so many places, maybe it's very profitable. Or how can they burn so much money, right?
Yes.
From a layman's perspective, yeah.
No. That's a very good what do you call it, lens that you view it from a user's perspective, and that's where a lot of people get a very good perception. But as an investor, you always want to peel behind the curtains and take a look at it and understand, because again, we are coming from you've just answered it radically simple from a user's perspective. But here we are, don't fall in love with the company because it's a user. It's great. It can be a great product, great service, whatever. But for every customer that they serve, they're burning money. Yeah, for the consumer, it's good. But as an investor, it's not, so you have to turn that lens on. You see? And that's why I wanted your experience. In KL is even more prevalent. You can't survive without Grab. I mean, literally, you can't survive. But we have an advantage here is that touch and go is also very predominant here. But it's not that prominent in Sarawak. Yeah, you have more things like Sarawak Pay, which is the.
I think Boost people use Boost a lot more.
I see.
Even Grab, Boost, Grab, Shopee Pay.
Yeah. Okay. So the four questions. So first one, what does the business do and how do they make money? Okay, great. As usual, Louis, where should we go? First question, how do we answer? What business do they do and how do they make money?
Their company website.
Company website, fantastic. So I'll share my screen.
At the end of this episode, I need to have a score. Louis, after like recording about 5 episodes.
it should be at your fingertips already. Like, way to go. Yeah. So you see most especially US listed companies, because the standard of disclosure is very high, you look at the way the website is built, there's actually dedicated how do I call it, microsites for investors one actually. So it's like they have a proper like a portal, a micro portal of where you see investors.grab.com. So if you go to grab.com, obviously it's I'm guessing it would go into the ordering.
No.
Yeah. Okay. Be our partner, delivery, whatever. But how I looked at how I typed and looked for this was I was looking for Grab annual report. Straight away, it brings you to the investor portal, very specific. You see, investor annual report. So we came here. Instead of reading the full let me see, this is how many pages? This is 383 annual report. What would be a shortcut, Louis? What would be a shortcut? We did this during the Alibaba one.
I remember it's called the investor deck, right?
Yes. So you go to events and presentations.
2 points.
Yeah, 2 points. Good. Sweat.
Oh my gosh.
Yeah, so you see they have what we call a quarterly results presentation. So every listed company, you have to present quarterly. Okay. You have to file your results, quarterly results. And sometimes they use it as an opportunity to actually prepare a deck for the investor. It's very common in the US analyst calls. It's not as common yet in Malaysia. And it's open to public. You don't need to be an investor to dial in and to listen one actually. That's the beauty of the US markets actually. Okay.
But I mean for Bursa we don't have that.
No. Only a few companies like every quarter I host this company called MegaFirst Corporation. So they are one of the pioneers doing it. But in the US it's very common. You can just give you an example, Meta.
I suppose it's also an opportunity for them to gain more investors, right?
Yes. But you see, in Malaysia, we've not gotten to that kind of maturity yet, They see it as a nuisance. No, serious. I know of certain public listed company owners that think of this as a nuisance. But you see here, you can listen to webcasts. You don't even need to be a Meta shareholder because you need to decide whether it's worth it for you to invest,
Makes sense.
But obviously all these are very curated. The lawyers screen through 1,001 times to know what they're gonna say, but it's all there. You've got the slides, you've got the earning call transcript. These are where professional investors actually go and search. So yeah, okay. So in this case, come back to Grab. You go under events and presentation. Let's look at rather than quarterly results, which tend to be usually brief, we look at the investor day presentation. So we download this.
investor.
Yeah. So looking at it, so Anthony open remarks. In 2012, they were in one country. 2022, they're in 8 countries, 480 cities. Look at all the green dots. Thriving marketplace. They earn their partner 8.9 billion. More than 680,000 small merchants join Grab. 1 in 20 people in C actually use Grab. Okay. So, what you just mentioned about your experience about many people using Grab. So, rather than just form from our lens and our bias, let's look at the data set lah. And this is quite true lah. Yeah, they're quite dominant. Okay. 99.9% without incidents. That means 0.01% had some incident, which is very good, to be honest. It's very good. More than 10 billion. Okay. You see, they keep on talking about the industry metrics for them. And at the same time, the numbers are all the way at the bottom. Because I mean, it's tough to make money. So they're trying to highlight a lot of, and this is where you will learn as an investor as you grow with time, right? People always want to show you, especially public listed, always want to show you the best side. Nothing wrong. But you have to anchor around the foundational questions of profitability. It's so common sense, but a lot of people miss that because they go and see all this, they get enamored by, oh, wow, it's big, wow, it's growing, wow, it's like, okay, for example, right? Oil and gas companies, there are certain oil and gas companies, they were doing bad in certain years. But then what they try to slap on in front of it, they try to talk about safety. Oh, we have a clean safety record. Yes, kudos to you. But are you making money? You see, again, is that camouflage, that's camouflage. Okay, so great. I'm not going to go through the whole deck. Okay, obviously you can go and read it. But looking at it is, I've not answered my first question, really. They're in a business where it's a super app. It helps. It becomes a platform for a marketplace to either do food delivery, transportation, buying and selling stuff. But how do they make money? It's not that clear to me. They haven't told me we take a certain percentage from the merchants or we get our users to actually pay us. That has not. You realize it's not clear. Even I'm at slide like 50 right now.
Wow.
You realize that?
No,
I don't know if you realize that.
No, I think I was like enamored by all the data.
You look a lot of data, but it's not talking about, hey, what's the take? What's the take? I'm getting 1% off my customers who are merchants and 1%, for example, 1% off my users who are that one. Do you realize it's not there?
Where is it?
I'm already at 30. Yeah, it's like 30.
Should it be there? Should it be there on this deck?
For me, I've seen great companies. They'll straight away tell you within the first 20 slides. I'm saying that I built these machines. These are who my users are. This is my take rate. Right? It may not necessarily be a super platform, but particular business where they sell products or whatever. So for me, I like coming back to the first question: how do they make money? It's not here. It's not here.
Okay.
So for me, it's not a bad thing. It's just that it's not here lah. It's not answered. I've not been answered. You see, they talk about all this. Wow, starts okay. So 26% uplift, driver partner 77. Okay, smart shopper. Yeah, all this for me is storytelling lah.
Talks a lot about the tech right? Tech,
yeah, talks a lot about the tech, whatever. Yeah. Okay, so again, come down to this, right? It's like, okay, yeah, you're giving me the statistics about, conversion from what? Conversion from a cash ecosystem to an electronic. Okay, great. Where are the numbers? So I screened through the whole thing already. Almost at the end. Okay. This is finally something that is related. This thing, GMV, stands for gross merchandise value. So that means from a product perspective, what kind of merchandise value are they deriving from all these services and products? But I've not even seen like a tech take rate. So you think about a platform, they are a gatekeeper. They are matching the merchants to the buyers, right? When a transaction ensues, I will take a certain side from each side, right? And if you ask anyone who is a Grab merchant, they will tell you that the take rate they are trying to increase. It's anywhere between 30 to 35%.
Yeah.
So that means if you become a cafe owner and you sell, Grab actually takes about 30 to 35%. It's not stated here. Maybe it's because of competitiveness. They don't want to share that with their other competitors. Probably that's one of the reasons. But that is the question that I want to understand. And it's not here. As an investor, you have to put on your investor hat, not a user hat. This is, it's great. Oh, yeah, it's impacting the merchants, whatever. But how? You see? So that's the first one. Second question, are they profitable? Okay, so I can't find their...
Okay, so John, we did not answer the first question, is it?
Not yet.
Oh, okay.
From this point, I did answer the first question, but what I'm saying is that from the deck, I couldn't answer that question.
Right. Yeah, okay.
Yeah. So their model is really merchant, user, I'm a matchmaker, I take a cut of both. That's how they make money. Okay. Yeah. So look at this. Okay, now second question. Are they profitable and financially stable? So can you see it's slide 99, it's almost at the end. Yeah.
Like I remember the Nvidia one, like we could find it quite quickly.
That's precisely my point. That is exactly,
Was laid out in
the first few slides, right? You already know these are my segments of my business. This is how I make money. And bam, that's it, This one is like, my God. So yeah.
Don't have the financial information on the deck, right?
Got lah. The last slide, last few slides, slide 100 of 107. So
Okay.
this is their EBITDA. So EBITDA stands for earnings before interest, taxation, depreciation, and amortization. I know there's a mouthful. I don't like to use EBITDA. Warren Buffett used to call it BS earnings. I don't want to utter the word, but it's actually he called it BS earnings. Okay, so he said his reasoning is very simple. In a business, you don't need to depreciate, meh? In a business, you don't need to pay tax, meh? In a business, you don't need to pay interest on the loans that you make, meh? So how can
why would we need to look at the value if it's not
EBITDA? Because it's a good way for Wall Street bankers and a lot of corporate finance guys to massage their earnings.
Okay. So it's not a figure that we should benchmark anything.
I never benchmark EBITDA.
Okay, got it.
Yeah. Okay, so coming back to this, they target to break even second half of 2024, which is next year lah. And I think to the question about profitability, is like they're not profitable now. They're growing their user base, and they are trying to find a way to that profitability path lah. Right now, they are financially not stable. So why do I say that? Let's look at the finances. Okay, so they only have they just got listed, so they only have 19, 20, 1 year, 2 year, 3 year, 4 year, 5 years of financial history. Okay, so I'm going to plot it out. This is their sales. Okay, 4 years. Profit is net income. So every year has been losses. Okay, I'm going to show labels. And then you go to cash flow. Cash flow is the lifeline of any business. It's good that their cash flow burn is getting less and less. So it's like minus 2 billion, minus 640 million, minus 900 million, minus 798 million. So it's good that their cash burn is getting less and less. Okay. So yeah, that kind of answers second question. Are they profitable? No. Are they financially stable doing it right now? Not yet. Okay. Next, who is the audience and how big can they grow? Then you come to this part, the presentation. I can answer it through this deck. 1 in 20 people, how many merchants were they growing? 680,000 merchants. This is where question 3 is actually answered. Who is the audience? How big can they grow? So if their dominant niche geographical region is Asia Pac, so we're talking about roughly 600 million people, because that is Southeast Asia's population. That's how big they can grow. So far, so good, Louis?
Yeah. I'm just thinking like at this point, 1 in 20 people in C already uses Grab, right?
Correct. So
That's
now
a lot of people.
Yeah, so now the struggle would be this 1 in 20 people, for every transaction that they make, will they be profitable for every 1 in 20 people? Because this 1 in 20 people, don't forget, they might also use Gojek of Indonesia. They might also use Food Panda. They might also use whatever what we call platform aggregators to make their daily buy and sell. And for me and you, customer stickiness is actually very, very tough one,
Yeah, agree.
You realize that? No? Yeah.
I feel like it's hard for people to be loyal to a platform like this because it's all about price, right?
That's right. Price, user experience, seamless payment. Like, for example, if you have great products, great user experience, but then your payment, like every time you swipe a card or you link it, it goes like haywire or that, you'll be pissed off also, Louis, after a while.
Yeah, true. But given that that both apps have the same experience, right? Which is I find to be true with Food Panda as well as Grab.
Correct.
Right? They are both like, they check all the boxes for all of the above that you've mentioned, and I often only compare the prices. Like whichever gives me the cheapest price, I'll go for that platform.
Correct. Same like my wife lah. My wife sometimes orders Shopee food versus Grab because delivery fee are so expensive because a little bit further away, or there's no product and promotion. You realize or not? Every time you go and purchase a service, if the promotion is great, that's when you get on it lah. But once the promotion is gone, you will try to find another cheaper one, correct or not?
Yeah, lor. So how would a platform like this have moat then? Does it have a moat?
I don't believe so. I don't believe so. I think it's you see, a lot of people think they can be a WeChat. If you look at the WeChat is really a super app. Really a super app. They have a banking system in there. They have so many merchants. People put millions in their WeChat, which
Seriously?
Yeah. If you go and study WeChat in depth, people actually put millions in their WeChat account.
For what though? Like, is there like
because they get paid in interest. So like,
okay.
You see like Apple Pay now launching. Apple Pay, they actually launched this 4% interest product.
Yes, I just saw that like a few weeks ago.
Yeah. So what they're trying to do is they are using your money as a deposit for to roll, to earn interest, to do whatever lah, right? Because you're not going to use it. People put in money, they want to get that 4% interest, but there's new users coming in, there's users going out. So once you learn how to manage this pool of money, right, you're actually giving free money for Apple to do a lot of things. But why would you want to put it there? It's always what's the incentive?
So they kind of like already removed the purpose of a bank, I guess.
Yes,
like
that's precisely why people in WeChat put in millions, because you think about the function of a bank, it is actually to facilitate trade.
Right.
But
that's the same as the Starbucks card, right? They always say it's a bank.
Precisely. Starbucks card, you know how many people put in $20, $30 and all that, and they top up and whatever, Starbucks, I can't remember the exact figure, but it's a big figure, and a Starbucks is actually maximizing it to their benefit lah.
So smart. Yeah. So, okay, so like what are the chances of a Grab becoming something like a WeChat? Right?
So I see them, at least their advantage is they're pretty dominant Southeast Asia. Okay. They still have localized competitors. People like Gojek in Indonesia is pretty big. I don't know who are the other competitors in Thailand. I mean, I've never studied Grab in depth because I never liked the business model. I thought it's actually, for me, it's a race to the bottom kind of business model.
Yeah.
Yeah,
That's
yeah.
true.
You keep on giving incentives. It's just like Asia trying to build a super app. And I mean, I wouldn't go into that today, but their cost structure comparatively to an app, Asia is going to die if they don't scale fast.
That's true. That's true.
Yeah, even the map services is being paid based on iView, you know. So
Oh,
yeah, yeah. I mean, I wouldn't go into the economics today, okay.
okay.
But just the map alone, it will cost Asia close to 10 times more for map.
For
Yeah, yeah. So again, scale actually helps. So that's where Asia has Grab actually has an advantage. How it will pan out for me is kind of really a wait and see. Even if it gets there, I still think they will struggle. Like C grew very big. C Limited Shopee grew very big, overtook Lazada. Now it's almost a neck and neck competition again because Lazada is up and coming. But again, for me, it's a race to the bottom because customers stick to these kind of platforms because of incentive structures, because of promotions and all that kind of thing. Even Amazon, undoubtedly the largest e-commerce website in the US, okay? But it's a low margins business for them. Amazon makes real money from AWS and their cloud services more than that of their e-commerce. You have to be big and scalable, and you have to do fulfillment. You think Amazon can only do profitable business from this is because they take care of fulfillment. You know, they have their own logistics hub, they have their own super centers to all do all this. For Grab to get there, yes, they bought Jaya Grocer. Yes, they're trying to use an offline to online kind of vertical, right? But how well do you get your fulfillment done? Is another picture. Is another question mark. What do I mean by fulfillment? You remember during COVID days and when COVID was coming down, less and less Grab drivers were coming out, and then it's very difficult to get a Grab. I don't know in Miri, very difficult to get a Grab driver, whatsoever, because the incentive structures, Grab started to reduce all the bonus, and then you see all these Grab drivers all go and protest, right? That is the problem.
Yeah, look. I think the just a very unsustainable like model. It seems very like if you compare it to like Shopee, right? I mean, I followed Shopee's growth very, very closely because I'm in e-commerce space. So the only reason why most people went to Shopee was because of the free shipping program at that time.
Correct.
Tons of people, like droves of people like abandoned Lazada, went to Shopee because they have free shipping. That's on the buyer side.
Correct.
On the merchant side, no commissions.
Yes.
But now the commissions are creeping up more and more, like matching to Lazada.
Yeah.
And now we see that, okay, merchants that are selling on Shopee are saying, okay, let's go back to Lazada.
Yes.
So now it's the same thing again, right? Then what will happen next, right? Is it somebody's going to also at the same time, Lazada reduced their commissions. So then what will happen? Is it Shopee's gonna do that? So there's no like I find it's very hard. Like if you compare to WeChat, right? Probably one of the reasons why it's sticky is because there is that social component. Right? Like TikTok. I feel that TikTok could potentially be a super app.
Yeah.
That's my opinion. So they are already like they have TikTok Shop, which is a marketplace that competes directly with Shopee. But then it has several advantages that Shopee doesn't have, right? So it's also like when we compare to Grab. So in the long term, I can't really see how this app would be something that people would be loyal to. If something comes up cheaper, is it everyone will go there, and then do you have to keep up with the promotions to keep it there? If you keep pushing out unsustainable promotion, that will also eat into your margins, right?
Precisely.
All at the same time.
Precisely. You hit the nail on the coffin, because if everyone is just giving candy, who's paying for the candy?
Yeah, look, if you invest,
if you're an investor, you're actually paying for the candy, and hopefully once the candy runs out, they'll stay lah. You see?
Oh, okay, that's a pregnant pause for me.
Yeah, you think about it, right?
Yeah, because I mean, if you just like imagine if your only draw is a candy, right? Like the other things, everything is replicable. I feel like the tech is not really not really like super high tech, like payments, anyone can do that now, like in terms of buy now, pay later. Lots of other payment platforms have it too, and then like the platform food delivery have so many other competitors in that space.
Correct.
The only part which is a bit harder will probably be the transportation.
Yes, yes. But even then, that's not within your control because you're at the mercy of your drivers. And the reason why the drivers come to you is purely because of incentive structures. Let's just be honest of it.
Oh, okay.
Yeah, you talk about what? Employee contractor loyalty. Hello, are you giving them benefits like a fixed income wage, monthly wage worker? You're not. So how else you incentivize them is purely is money lah, right? They don't get performance bonus, they don't get performance shares whatsoever. So again, you see a lot of times they say, oh yeah, we have an asset light model, we don't hire many employees, these are contractors, you know. But contractors come and go. Hello.
True.
Again,
So answering the third question, what's the summary?
they can grow very big, but can they grow it profitably?
Okay. Yeah.
Can they grow it profitably is still a question mark. I'm not writing them off, but looking at it, it's like what you said, like what I opine as well. It's going to be tough lah. It's going to be tough lah. It's not going to be easy because the key is now is there's honey to be going around, but once the honey is gone, then who else is going to stay lah, right? So we're going to move on to the next question, last question, which is, are they cheap or expensive? Okay. Now, valuation wise, remember in the previous episodes, we talked about how many multiples are they of your earnings, but now they're all losses. So
Yeah.
how do you think we should value them?
Price to sales.
Yes, price to sales. So
3 marks today.
yeah. So
Paying attention, yeah.
Yeah, you paid a very good attention. The thing is, let me see. On Ticker, they don't have a price to sales, do they? Technically, oh yes, they do. Valuations. So you see here, net. Next 12 months. So it's talking about forward. So forward is always a projection. They project like how much can this company earn in terms of sales next year. But if you want to look at what we call trailing, trailing means what you've done in the past, your track record. Then you look at LTM, last 12 months. NTM is forward, and trailing is LTM. Okay.
Okay, noted. In case it's being asked in the next episode.
Yes. So look at it. Overall, look at the valuations. When they listed, they were listed at 18 times sales. Okay. At the peak, at the height, this is, I think, March this year, 22 times sales. Okay. I want all. How come it should have dragged me all the way? Yeah, but anyway. Now it's going for about 7 times sales. 7 or 8 times sales. So do you want to know whether it's cheap or expensive? Look for another equal competitor. I don't know who is a listed guy. Maybe Gojek. I don't know whether Gojek is listed. Oh, they are. As I said, I've never studied this business because it's always a race to the bottom for me, kind of.
Agree.
Yeah. So let's see the share price. Wow, also quite bad. Finances wise, okay, true lah. They grew sales. Also loss making. You see, all loss making. Valuation wise, okay. So Grab is selling for price to sales trailing of 7 times. Gojek would be 8 times. So if you talk about relative, Grab is cheaper lah.
Okay.
Relative lah, relative. Grab is cheaper lah.
Okay.
Yeah. So there you go. The 4 questions. What business do they do? How do they make money? Are they profitable? As a second question. Third question is, who's the audience and how big they can grow and whether they're cheap or expensive. Price to sales, because there's no profit to talk about. Okay.
Is it like my question with regards to the fourth question is like, okay, so is it necessarily a red flag or like a no buy immediately if we can't even do a PE?
It depends on the context where you're invested in. In the public markets, I think it is more risk adverse to have profits before you decide to invest.
Okay.
Versus that, if you are in the PE, the startup angel investing world, what you are actually buying, you're actually buying into an idea. Now, a lot of times, people who come to the public markets and they say they buy into the idea and let the profits come later. But a lot of this is only sustained by hype. They tell you the story. When you're publicly listed, I think about it, for an investor, I'm quite risk averse. I like to buy into a company where you already proven to me a sustainable business model, profitable. And why you're coming to the public markets is you want to scale it. You need the money to scale. But what we're seeing more and more is that these companies, they grew so big, they become unicorn. They're coming to the public markets, raising money to test out their model, which for me should have been done in the PE space, VC space. PE means private equity, VC, angel investing kind of space. Let it undergo the evolution, prove it that it's a profitable business model. Then you come to the public markets to scale. That's what Amazon did. You see? When Amazon listed, they were already ready to scale. They already proven it was a profitable business model. They were free cash flow negative, correct? But why? Because they were pouring money to scale the business, not to pour money to prove whether the business model can work.
Okay, so the difference would be like whether we're paying like for someone to conduct their experiments or paying for business that actually generates a profit.
Correct. I know it's a deeper thought process, but for me, that's how I look at it. Yeah. You let the PE, VC, angel investing space test your idea out. Then only you go to the public markets to scale your business. If I'm not saying it's who am I to say whether it's right or wrong for them to do that, right? But for me as an investor, prove yourself first. And buying after they've proven it to be profitable is not too late.
True. And
it's not too late.
And I guess, I mean, given that there's so many companies that you can buy into, right? If you have put your money into a company like that, and then we don't know when it will be profitable, then it's also an opportunity cost at the same time.
Correct. If you want that kind of investing style, you can go into the VC PE space, which is a rich man's game. But when you're in a public space, sad, but a lot of people forget that it's actually it's anybody's game, because you can start investing in 100 ringgit.
Makes sense.
But when you are in the private equity, the angel investing startup space, it's actually a rich man's game. So they have money to burn, they have money to experiment, they also have the because most of them are likely business owners themselves, right? Or have been through private businesses themselves, and they hand it over to professionals who evaluate these kind of ideas and businesses, and have that wisdom and experience. Then okay. But if you're in the public markets, just because it's a brand name, just because it's listed, then barriers to entry is lower. But then they don't understand the deeper nuances of the game. You get me? Yeah. What I just said, I mean, would you have thought of it that way? People getting to public markets and then getting you to fund the experiment,
No, I would have never thought of it that way. I think before I was always wary about like tech companies in general, right? In general, but I wouldn't know how to like look at it. Like, what are the factors to look at? Does it matter if they're loss making now? Maybe they might be profit making in the future, right? That might be the mindset, because you see them everywhere.
Yeah,
you see them everywhere. That's the mindset, right? If you're everywhere, you're like, okay, actually, at least it's safe, right? Because Grab is everywhere. It's not going to close down anytime soon. It might be growing. We don't know. If we don't look into the actual figures, we don't know. We just make an educated guess. Very uneducated actually, but as educated.
As a guess. Yeah.
And I think also, like, when you look at news, right? I think the thing that does affect the stock prices now, I think the Grab news,
Yes.
like recently they laid off like 1,000 people. employees, right? So
Yeah.
that might concern me. Like that is
Yeah.
something that when I look at it, I'm like, why would they need to lay off so many employees? And
Correct.
it makes me. I mean, I read the letter from the CEO Anthony, and it was all a lot of jargon inside.
Yes.
And whenever someone uses so much jargon, it makes me wonder, what's actually going on in there. And then when you mention like the EB, what do you call it?
EBITDA.
EBITDA. Yes, and I remember seeing that in the letter.
Yeah, a lot of it will be in the all this jargon lah.
Yeah, and then there was like a guy in LinkedIn and like, okay, the letter was like very robotic. What's EBITDA? Most of your employees will not know what is EBITDA. What does it matter to them?
Correct.
What does it matter to them? And then then it also made me wonder, like, okay, so we have a founder who appears to be quite robotic in handling these matters, right? And I am not someone who thinks every leader should be certain way, but it seems from the public opinion to be negative.
Yes.
Okay, so first there's a layoff, then you have a letter which is being perceived quite negatively, has a negative sentiment around this letter. So when we look at it, I mean, just your opinion, John, like something like a layoff, right?
Yeah.
And these kind of sentiments, like how concerned should we be as a potential investor?
I think for me, the moment you start confusing people or trying to mask a lot of these things with jargon is already for me a very big red flag. You look at how Bob Iger. Bob Iger is formerly now he's back already. CEO of Disney, right? The way he approached it, tell it as it is. People don't like to feel stupid lah. People don't like to be condescended and whatever. And I feel the more you put up all this jargon whatsoever is to confuse, for me is to confuse the real scenario lah. Now I give you one classic example how well it could have been done. Okay, we've covered Netflix, but I don't know whether I told this story during that Netflix what do you call it episode. How Netflix turned around, they were almost bankrupt. They gathered everyone in the parking lot. Everyone had a copy of the company's P&L, transparent. And this was before they were a public company. Okay? Everyone had a copy of the P&L. Guys, we're about to go bust in 3 weeks or 2 weeks or whatever. Okay? Tell us how we can save all of us. We're in the same boat, guys. You see the level of trust, authenticity.
Also shivers to my...
Sorry?
I'm like shivering listening to that because like, wow, 3 weeks to bust, man. I mean,
if
my boss handed me that, I would be looking for a new job.
But because my boss is in the same boat as me, he's at the wit's end to try to save all of us. And here I am. You see what messaging does it send?
True.
It says that I have responsibility to save myself and this company. Whereas if you come out with all that kind of letter, you're saying that you don't understand, you're not smart enough. That's how I read it. You don't understand, you're smart enough, let me figure it out. But sorry, I gotta let you go. Versus says, hey guys, I really want to make this venture work. You all have brought us to this stage. Can you all help me get out of this stage? You see, for me, that's a 100% lesson in leadership and how to run a business.
Yeah, for sure. I think that literally, like, I felt like I was like I was in two minds around this issue because like on one hand I was thinking, okay, should you stay like completely diplomatic in the way you had or robotic? Would that be better? But it seems to be like received very badly the people who are affected especially. I can't imagine being told like you laid off, then this is how we can improve our EBITDA. That sounds to me like a lot of effort going down the drain, right? So I mean that also like makes me concerned about like the leader. Sometimes like you look at your company, if a leader handles these situations this way, then what's next, right? What's the next way? If there's problems, how is he gonna like face his employees again? And then all these negative sentiment around the business, sometimes it will cause people to also like not use the app.
I think, to be honest, what Anthony has done to bring Grab to this level, by me making all those opinions and comments, right? I'm not a guy running $1 billion business, but at the same time, because I benchmark against other businesses around the world, I think I've seen enough to say what things can be done better, but it's not being done better. So for me as an investor, I have the right to my own opinion, and I have the right to my own money. So I decide lah. It's not to say there's any hatred to those kind of owners or CEOs. It's just that as an investor, you have the right to choose, ma.
True. Yeah.
Yeah.
You put your money where you think, like, I respect the leader.
Exactly.
This is going where I think it should.
Yeah, and don't be enamored. For me, and most importantly, don't be enamored by the size. Or a lot of people fall into this fallacy of, it's $1 billion business or whatever. No, does it make sense to you? Apply some common sense and then trust yourself. You see, and how do you trust yourself better and better is to upskill. And remember earlier I said to the point about rather than going to the public markets to experiment. I give you one perfect example. You and I use it. It's called Wise.
Wise, yeah.
Okay. When they first listed, 3 years of before they got listed, 3 years of where they because when you list a company, you need your 3-year historical financial results in your private business before you disclose to the public and then get listed. So the years when they were disclosing that, when they were still a private business, they were at a loss. But eventually, after 1 or 2 years, they started to become profitable already. You see? So again, this is to me is a classic example of how when you come to the public markets, technically you should be profitable. There's no two ways about it. I mean, look at all the disasters that has happened in the public markets when it didn't work. We work. In their prospectus, straight away they put a disclaimer. We will never know if it will be profitable.
Oh.
You don't believe me? You go and download the WeWork prospectus.
Wow,
You will never know that we will be profitable. Straight away, disclaimer. You want to buy? But people buy big because of hype, ma.
Hype,
All the big institution guys, this is the next big thing. And then they saw who? Masayoshi Son, SoftBank CEO, invested. He also made a mistake. I mean, now you have the beauty of hindsight, right? A lot of people forget that you learn so much from disasters, much more than from your successes. Because success, there's a lot of factors that can help you. Luck.
Yeah.
One.
Yeah, luck is a big one. Yeah.
Yes. But in disasters and bad things that happen, that's where you learn the most. And actually, it's a good segue to the book that I'm about to introduce. Actually, before that, any more questions about your about Grab? Actually.
Okay, so just one last question about competition, right? So there was also like this news around like this like restrictive clause, like an 86, but I mean it's like been set aside already. But what do you think about such things like happening to Grab, and then would it affect the business like in the long term?
Yeah, it does. Regulation, actually, if you read the annual report, I just had a glance through last night, right? To understand what are the challenges and risks Grab has, right? Apart from not having enough take rate or whatever, it's regulation risk. Because first, I don't know if you realize when they first started, when they were ferrying passengers, all their cars were not insured,
Oh, I didn't know.
Insured commercially. Because for the taxi, you need a commercial license to be able to carry passengers.
Yep, correct.
So can you imagine they were saving costs all that without passengers knowing,
Yeah.
So it's like you're operating a building without your certificate of fitness, It's a normal passenger car, okay, but you're using it as a commercial vehicle. That's one. Second thing, there are drivers before this, now they have this sticker called e-hailing. All the JPJ, all the taxi drivers, every year their car has to be inspected by Puspacom. Okay, every year you need to recertify your car whether it's safe, roadworthy, all that kind of thing. The Grab guys don't have. You can drive an old beat up car and still ferry passengers, even though it's risky to the passenger. That's why now they have that e-hailing sticker. It's because all these Grab drivers has to sit through theory tests in JPJ.
Wow. Okay.
I don't know if you know that.
No, not really. No.
Yeah,
I
yeah,
never
yeah.
looked into that. Oh, okay.
So to your question about regulation and all these kind of things, Grab got away with a lot of things because the regulators were not strictly enforcing all this.
Yeah, it was a new thing lah as well, right? You couldn't like find out like
Yeah,
eventually you did.
correct. So now they say that I want to go into a super app, I want to go into banking, correct?
Yeah,
So
lor.
they're now going for digital banking license, whatever. They will realize soon enough that regulation is even going to be even tougher than all this.
Wow.
Why
Wow.
banks remain profitable till today? Because of regulation, because the barriers to entry is so high, because regulatory compliance cost is expensive. You see, you hold a branch, you just think about just branch banking. You go to a bank branch, you need to have a safe vault. You need to have security guard. You need to have CCTV systems. All that not cost. You see? Yes, they say, oh, you need digital bank. We don't need to branchless. We don't need to hire staff, whatever. Everything through the app. Okay. Then what happens next? PDPA, leak data. Is your all your business governance all in check or not? Are people siphoning money off or not? Are people doing unscrupulous things inside your system? All they need compliance check, mah.
Oh.
You see?
Well, so like on there's like on two fronts already, like one on the transportation front, and then there's this finance front.
Finance one is going to be even tougher.
Okay. So
Yeah.
I guess for investors, those are things to consider.
Correct.
In terms of regulations.
Correct.
Okay. Yeah, I think that wraps up the Grab analysis. So guys, if you have found that useful, do leave your comments in the if you have any other questions, leave them in the comments below. So now let's get into the last section of this episode, which is the investing book recommendation. So that you mentioned some bad companies, right? So I can see here you're recommending one book about it. I've never heard of this book, so go ahead.
Yeah, it's a good segue to actually what I've just divulged over the past 15 minutes. It's a company called it's a book. Sorry, company, blah. It's a book called Dead Companies Walking. He is actually a market shorter. So he shorts companies for a living. And not to say he only shorts, he also do longs. That means he buys companies on the way up so that he makes money on the way up. But for me, I found this book, and I read this book probably about a year plus ago, 2 years. Actually, no, longer than that. I heard about the title probably about 5-6 years ago, but I only read about it probably about 1-2 years ago. And I love the insights because you actually learn from failure. And you actually learn so much more from disasters rather than from success stories. And the best part, there's a part in the book where he actually brought his father, who's an academician, okay, to a company visit. And within 15-20 minutes of his visit, the father cannot tahan because the guy on the other end was selling BS. So the guy started, they were visiting a pharmaceutical company. Not even a pharmaceutical, an online platform to distribute pharmaceutical products. And the father actually called out the BS and started asking this guy, the guy on the other end who was the CFO, about what about this? What about this? Have you thought about this? And because of that visit, the son, the Scott Fearon, actually shorted the company.
Oh,
And he made money. He obviously made money. Obviously, there's only one small part, so I'm not spoiling the book, but there are many, many other stories inside there that for me, as an investor, and it's not very complicated because he doesn't go too much into numbers. He talks a lot about concepts, common sense, and what to pick up for. So I feel it's an easy read even for the beginning investor and the intermediate investor. Even for me, as I would say, investing for quite some time, I also still found insights to it, because it's like how do you look at it from another angle? How do you not put on bias and all that kind of thing, yeah.
So I mean, like what I mean, you read this about a year ago, more than a year ago, but do you remember like what are some key concepts that were interesting to you?
Okay, that story is one about common sense. The other thing is that instead of putting on a bias, your own bias, because let's just say you're on Wall Street a Wall Street banker, what he or she is doing, the payment things they do, the shopping habits, whatever, right? You're in that bubble. The struggle is most people don't extract themselves out of that bubble to actually look at other things, look at things from a different perspective, look at things from a different lens. He actually talked a lot about the 2008 crisis. He actually talked about, and the bigger crisis, there's another crisis in America, stock market crisis, was in the 1980s. The oil boom and bust.
Oh, interesting.
So that was very, very interesting for me, is because a lot of these crises, they look different, but they're actually the same. It's a period of exuberance, and once that period of exuberance ends, the fuses actually end. The fuse, when you light a firecracker, the fuse actually ends, right? That's why the fireworks happen. And once you learn how to pick up these signs, it's actually very interesting that you can learn how to avoid them. The moment you notice certain exuberance, you can start. Yeah, he was actually I can't remember where was he from, but he moved to Texas. And if you've been to the US, Texas is oil country.
Yeah.
There's a lot of oil billionaires there. And he said in the past, he actually spoke about Enron also. Enron was the biggest corporate scandal in US corporate history. He met Jeff Skilling, all these guys who were like promoting Enron, right? And how Enron actually arrived at the briefing was actually through a helicopter.
Wow.
So he said the first day, after one night, he spent his first night in Houston, and he woke up the next day, right? He was woken up by the sound of helicopters. Then he realized everyone will have a ranch somewhere in the outskirts, and they will actually fly into Houston using a helicopter. So that was the period of exuberance, actually.
That's interesting.
Yeah. So a lot. There's a lot. For me, I think learning insights would be how to identify exuberance and how to use common sense. Two key insights.
So that's for us to like avoid like maybe companies that appear great, but in fact are actually dying.
Yes.
Maybe paying.
Yes.
Okay, it's very, very interesting book. So hopefully you guys, like our audience, also find this interesting. I mean, I love to investigate. I love to watch crime documentaries. So this is like way up my alley. So hopefully everyone, you have found this episode useful. If you have thought about investing in Grab, what do you think about it now? Leave your comments in the comment sections below. And if you want more analysis like this, then make sure to subscribe to our channel. And also, if you like the content, give it a like so you help us with the YouTube algorithm. Thanks for watching, and see you again in our next episode. Bye-bye.